So being in a crypto winter doesn't feel really great, right? Bitcoin is down more than 70% from the all-time high. Some altcoins are down more than 90%. It doesn't feel great, but in the grand scheme of things, this is actually the easiest of the crypto winters. And that's because I think it's the easiest to buy this dip compared to what happened prior. When we look at the crypto winter that happened in 2014, the Silk Road / Mt. Gox crash. That was way worse. Not just in terms of the drop from top to bottom, right? So we fell 86% roughly. But the main question is the two main use cases of Bitcoin at the time, they were lost, right? Bitcoin was used for active trading on Silk Road, right? More or less not the very most legitimate way to use Bitcoin, but still, right? This was the main use case at the time. And the main exchange, Mt. Gox, also went bust. It got hacked. Now imagine the equivalent today, right? The equivalent would be that suddenly Binance goes bust. So that's what we saw during this time. And it's way harder to buy Bitcoin during such a crash because the future is uncertain, right? Will Bitcoin ever have another great exchange again? Will it ever have another use case when Silk Road has already been clamped down that much? So it was way harder to buy the dip at that time in 2014. Now the same is true with the crash in 2018, the crypto winter. So there we also felt pretty much the same. That was 84%. Before we fell 86 during the Mt. Gox crash. And what happened there? We had this large run up, right, up to 20k. And then we got the crash all the way down to 3.5k. Now the run up was accompanied by a lot of ICOs, initial coin offerings. So a lot of crypto projects that raised money and promised utility that then in the end were just hyper speculation, right? People in the end just bought it in order to get some kind of inherent leverage on their investment. They didn't really believe in the project necessarily long term. And so most projects, they simply collapsed. And then the question was, would Bitcoin survive all of this? Because Bitcoin Diamond crashed, Bitcoin Gold crashed, Ethereum Classic crashed, Cardano crashed quite a bit. So that was then the question, right? Would it ever recover? And the main concern that happened during 2018, 2019 was, would crypto get outlawed altogether? Because all of these projects, they raised money, but there was no regulation around this. And there was also still the question of, would Bitcoin be banned because it could be used for terrorist financing? It can be used for money laundering potentially. So that was the problem, the risk of buying the dip in 2018. If you bought Bitcoin at 3.5k, you had to take the risk of living with the uncertainty that the US and then by extension a lot of other Western countries might not allow you to hold Bitcoin. So there was a chance of this actually really going to pretty much zero and never recover because it would simply not be legal to hold it. And so that's why I see these recent crashes, so namely the Corona crash and now the current crash, to be less of a problem. Because what happened during the Corona crash? We saw a drawdown of 62% roughly. And why did this happen? Because of the macro influence, similar to what we are seeing today, right? Traditional finance went down quite a bit. There was a deleveraging, then a cascaded liquidation of several holders. And so we saw a drop of Bitcoin by more than 50% in a single day. So it was quite a ride, but also at that time it wasn't that easy to buy the dip, and that's namely because we went through this V-shaped recovery. We saw these very low prices only for a very brief period of time. So you couldn't really DCA into it. You had to buy with whatever current liquidity you had available. And of course, some smart people, they bought that dip, but a lot of people, they simply didn't have the time. They couldn't allocate enough. They didn't saw this as strong enough of an opportunity to buy. And still, we didn't fully recover from the 2018 crash. Right, so we fell like from, I think it was 11, 12k to then around 6k or so. So it wasn't that easy to be really then participating in the subsequent rally because we simply went at these depressed prices for a long time. Now, with the current crash, a lot of these fundamental risks are gone. And that's very positive. We know now pretty much that at least Bitcoin itself, some altcoins might, but Bitcoin itself is unlikely to get outlawed. It's very likely that the US will continue to accept in some form or another to store your wealth in Bitcoin. Maybe you have to do KYC everywhere, etc. There will be more and more regulations coming. But still, holding Bitcoin, owning Bitcoin is unlikely going to get completely illegal. So a crash to zero is also pretty much unrealistic. It's not going to happen. Bitcoin will stay. And so when we take this as an extension of, is it easy to buy the dip? It's way easier now, because we can pretty much assume that if liquidity expands again, if risk appetite will go up again, people will get risk on again, then Bitcoin will recover as well. It's just a matter of time. And when you look at different surveys and you ask people, do you think in like 5 or in 10 years Bitcoin will be higher or lower than now? The vast majority says they expect it to be higher. And that was not necessarily the case in 2018, 2019. People weren't really sure because maybe it all gets outlawed. And the same is true after the Mt. Gox crash, right? People were not sure. The main exchange lost, the main utility was lost. Maybe Bitcoin will just bleed out and never recover. But nowadays there's more long-term conviction. Bitcoin has been around often enough. It has crashed to that degree often enough. So a 70% crash as we see today cannot really destroy the brand of Bitcoin. It's different to other markets, right? If a traditional asset would fall 70%, a lot of people would never expect the asset to recover again. But for Bitcoin, because it already went through so much volatility and because it has some kind of regulatory certainty now, is different. So that's the positive thing. You can really use Bitcoin now as a savings vehicle if you have long enough of a time horizon, because the certainty is relatively clear. It's relatively certain that at some point Bitcoin will recover again. And that was not necessarily true in other crashes. So it's the easiest time to buy the dip. It doesn't necessarily mean we can't fall further. A lot of people actually expect this. Again, if you do other surveys and you ask, hey, do you think Bitcoin will rather go to 15K or to 30K from here? A lot of people actually expect a further dip, but nobody knows, right? At the same time, a lot of people also expect that over the very long term, it will recover again. So that's kind of like the easy game then, right? If you have an asset that you expect has at least a core of investors that try to hold this over many, many years, then a bottoming at some point will happen. Now, why did we see all of this crash? Why did we go down from 70% by 70%? Of course, the monetary tightening is one thing, but the second story is also that the institutional adoption, as in what Tesla started and MicroStrategy started, is probably not going to happen in the way it was initially anticipated. So initially, a lot of people thought more large companies are going to get Bitcoin on their balance sheet to protect themselves against inflation. That seems to not turn out. But what seems to turn out is that Bitcoin really becomes now the savings vehicle of the small guy, of the retail people. A lot of people bought the smaller wallets, bought the dip when Bitcoin went from this almost 70K to 20K. You see the wallets that have at least one Bitcoin, that number of wallets went up pretty sharply. So it's retail that's buying this up. And it's also those people that have the longer time horizon, right? They also bought the other dips. And I think they rightfully assume that Bitcoin at some point will recover. And if that happens in 6 months or in 3 years or maybe even in 6 years, really it doesn't matter that much. You have to allocate your savings somewhere, right? You're unlikely to get rich instantly with any kind of investment, but you have to put your money somewhere. Traditionally, that was in a mortgage. Some people put this also into stocks. Nowadays, the younger generation, I think, is better off investing for the long term, for a savings plan for many, many years in Bitcoin, because Bitcoin stays, Bitcoin supply is capped, it's very limited, it's way more limited than other assets, and the additional volatility that we get through those cycles in Bitcoin are actually positive through dollar cost averaging, right? You can take advantage of these lower prices. If an asset never crashes, you can't really take advantage of any lower prices at any point in time. So that's ideal, right? We've got an asset, super liquid, super volatile, that's likely going to stay for the next years. So it's a relatively easy buy, at least compared to other bottoms. So if you're looking to buy any bottom and you're kind of thinking, oh, I wish I had bought in those prior crypto winters, nowadays Bitcoin might not grow as much anymore. At those points in times, if you're currently not buying at those previous points in times, it's very unlikely that you would have bought at that time, because the risk versus reward, in my opinion now, is even better than it was in the past. The reward might not be as high. You're not going to make a 50 or 100x in the next 5 years, but the risk is also way, way lower. And so it's easier to allocate a larger amount in US dollar terms in Bitcoin than it was when Bitcoin was just a few cents. So I hope you enjoyed that video. There's another video, a similar kind of format, discussing the current bear market. Feel free to watch that. And thanks for watching this one. Bye-bye.